Every month we pick up on what the investment markets have been doing with David Bacher of Corion. And today's Corion report has got some very interesting insights from the month of April. Plus, I'm going to ask David what he thinks about my share tips in the Fantasy Fund Manager. We'll have to keep those for the end, David, because as you say, you're not a share picker. But it's a lot of fun, the game. Oh, how are you doing so far?
I'm getting you think managing clients' money is something that should does keep us up at night. But having that responsibility plus my wife trying to beat me, plus the work colleagues, I've never had so much pressure in financial markets. So and that's all part of the game. It's fun. We're enjoying it. And it's nice to see that we're getting such a good response from this initiative.
Well done. Yeah, more than 2,500 people are playing the game already. I'm sure that those numbers will grow as the non-participants see how much fun we're having by being there. Day one, I got into like the first quartile, first 25%. So I feel that's okay. That's not it's not too bad. Except Naspers hurt me really badly. Anyway, we'll talk about that later. But let's pick up on the month of April. Now, last month we spoke about banks getting into trouble. There was the Silicon Valley Bank in America, and there was Credit Suisse in Switzerland. First Republic Bank recently, this week, has now been taken over by JP Morgan, which JP Morgan loves because they're so big, they're not allowed to buy other banks. So they were forced into or nudged to do it by the Federal Reserve. So for them, it's a good thing. But for markets generally, it must bring a lot of nervousness. Did you see that in the performance in April?
Funny enough, the month of March was thankfully calmer than the many months we've had before. Global equities rose by about 1.4%, and most markets around the world was, slightly in the positive. So it could be nice to have a less newsworthy month. The South African markets,
Sorry, you say March. You meant April.
I meant April. Gee whiz, it's been a long night with Fantasy Fund Manager launch. Thanks for the correction there, correct. Yeah, the April. But in South Africa, our market may appear to be been stronger in April with a return of 3.4%. But, our currency depreciated by a similar amount, so we ended up pretty much flat as well.
And we've got to have a look at this from a global perspective. David, let's get into that big question, because every time I talk to one of our gurus here in South Africa, they say shares in South Africa are cheap. But how can they be cheap if the indices are near record levels?
Very good question. So firstly, the index is a good representation of the market, but in some markets, and specifically South Africa, you're going to look at what makes it that index. So in South Africa, for example, Richmond is close to 20% of the market, and that's been on an absolute tear. So you've got to always look a little bit deeper what's underneath. And some of the heavyweights, the palladiums, the gold shares have also had a run. So that's certainly meant our markets has appreciated. But underneath that, there's a large part of the markets that is trading in single-digit price-to-earnings ratios, attractive dividend yield. So if you look a little bit more broader, and yes, South Africa has a narrow market, we're aware of that, but we're trading at a price-to-earnings ratio of less than 12. Our long-term average, if you date back to 1995, it is about 15.5. So yes, we have challenges. Yes, things are a bit uncomfortable in South Africa, but we think that is reflected in the price.
Let's bring up my screen. I love to share. As you know, I'm trying to do clever things now every time that we talk, and I'll be even cleverer if I can actually get Steve Jobs' Apple to work the way it should be working. I'll be calling up this screen right now. Hopefully you can see it coming through. Those are the notable moves from the Corion report. As you can see, global equities 4.5%. But it was quite interesting, and you've already referred to the Rand dollar and SA equities. But on the right-hand side, some big moves again for mining stocks.
Correct. And if you look at that list, and what we try and show here is the notable moves, and you see the precious metals coming right to the top of the list. So you have two platinum shares, Northern Platinum and American Platinum, two of the top three shares in the Aussie top 40. And That's because of really a platinum price that was very, very strong. But if you look at on the bottom side, you see another commodity is one of the worst producer returns, and that's BHP Billiton. So they were down 5%. So you always got to ask, what are they mining and why is it different? So the Northern Platinum and Anglo American Platinum, obviously precious metals and have their unique drivers. Well, Billiton is more iron ore, steel, and different commodities, and those commodities were actually down quite heavily last month.
So there's an interesting contrast between the two. I like this table that you had in the Corion report this month. SA equity returns, and because of the symmetry of property, you look at 5 years ago, it was last, then second last, then over 1 year in the middle, then over 3 months, second, and now it's top. Does this mean it's time again to be buying property shares?
Well, that 5-year number includes what was horrific year for property counters. After more than 2 decades of good returns to the property sector, they had a horrific period, COVID, and also the unbundling unveiling of some corporate issues of certain companies. So, that's in the 5-year number. To answer your question more specifically, yes, property shares have come back quite significantly. We're certainly seeing some value in certain property shares, and in our portfolios at Corion, where we're looking for yield, we have been increasing our allocation to property from what was a very negligible exposure to something a little bit more meaningful.
That's interesting. So it is time to have some property in your portfolio, even though the clouds seem to be very dark when you talk to people about the outlook there.
Correct. I think investing is neither you're all in or all out. You've got to increase your exposures when you think the valuations are more compelling. So that's what we have been doing. Yes, there are some dark clouds in the property sector, vacancies are up, etc. But that is, in our opinion, reflected in the price movement. So investing is not just looking at the environment, is also all the company is looking at what you are paying for that company.
The other good mover in the month was resources. Now, this is interesting because on a 3 and a 5 year basis, resources are top of the pops. But on a 1 year and a 3 month basis, they are bottom out of the 5 major areas. Are we perhaps seeing resources starting to make a bit of a recovery?
I think that you got to look underneath and what's driving those resources. So the index that represents the resource index is heavily weighted to Anglos and Billiton. So you got to ask what the drivers of those shares. As I said a little earlier, those commodities haven't bounced as much as the platinum and gold shares. From our side, we are seeing those companies come back a lot to much more attractive levels. So from being reasonably underweight, we've started to close that gap too.
I'm a bit worried about all these industrial shares that we have in the BizNews model portfolio because over a year they've performed incredibly well, 35%. But that kind of return doesn't go on indefinitely. Certainly over 3 years they've done well, 16%, but still worst of the equities. Are you feeling that industrials might be fully valued or getting to fully valued now, or is there still a lot of value in them?
So once again, I think what the beauty of the Corion report is the way it simplifies information. However, by in your quest for simplification, you do lose some of the detail, and just maybe highlight the industrial index contains a NASPAS, which is a big weighting. They've had a very good year. So you got to sort of strip that out and look at, is South African Inc. Industrials a place to be? And that's been, after, I would say, a very good 2001, where it rallied quite strongly. The last 12 months with load shedding, etc., has been a bit tougher. But as I said earlier, a lot of those shares are trading at what we think are attractive valuations, and investing is uncomfortable, and if it's not uncomfortable, it's really profitable. So you've got to actually go back to basics and try and see the long-term picture. And we think once again that in certain industrials, the value exists.
Okay, stock picking. That's the clear message there. And then when we go into this fund, I love looking at the SA General Equity Funds. It's 1 year and 1 month, so it's not exactly a long-term picture, but it does give you the trends. And on those trends, same as last month, we see Fairtree, PSG coming up there, Perpetua coming up quite nicely as well. And on the other side, most recently, these dividend funds, dividend growth funds, performing pretty well in the past month. Is there anything that we can read from these tables?
I think the dividend funds, those ETFs or funds that have a philosophy to try and attract high dividends, generally or certainly of recent past, were the shares that were from resource natures. They were an attractive dividend yield. So how well or how badly those funds have performed recently, quite badly, has been more reflective of the resource shares that they have been buying. And when you're buying resource shares, few things in investments are certain, but probably maybe one of them is resource shares are volatile. And you can look very, very good, and you can look not so good at a certain time period. So you have to take a bit of a longer term view. So a strategy of buying companies with high dividends generally does work over the long term, but over the shorter to medium term, anything can happen.
PSG Equity, that's a good fund, isn't it? It's a big fund, 7.5 billion, and yet they're still up there performing in the top 4.
It's an amazing story. We have actually done an analysis a couple of years ago on the PSG Equity Fund, and because they take high conviction views, they're often at the top of the pops or the bottom of the pops. Over the longer term, they've done really, really well, so hat tip to them. But what we find more concerning is we match their performance with retail flows, and as they're performing so well, in comes the money. And as they're starting to go through the invariable dips, out goes the money. So, maybe it's a lesson for all investors. Stay the course, stick to a manager you believe. And as PSG is showing, over the longer term, you will be rewarded if you believe in their philosophy.
The these are the inflows for the funds over 1 month and over 1 year. And again, 361, we saw this last month. The Cy Jacobs' group is attracting a lot of money. Walter Aylett there as well on the high equity side. Amplify is not a stock that I know, a house that I know well, and you can tell us a bit more about that. But it's almost like the Cy Jacobs story is now becoming appreciated.
Yes, I think it's a combination of a few things with 361, a good manager, a good team, a good long-term track record, not being too big in the South African market. For a very long time, you've had the Alan Greys and the Coronations and the Investex really dominating the local landscape. And although they are all very credible and good asset management houses, having concentration to a few names is not healthy. So what we are starting to see, and I think thankfully for a healthy industry, is new brands come to the fore, the likes of a Fairtree, the 361s, etc. So a combination of investing in your brand, investing in your people, and longer term good numbers, and you're starting to see the rewards.
Amplify SCI Wealth Protector, some big inflows there. Tell me about that fund.
So if I stand to be correct, Amplify is just a brand. I think it's a Sanlam initiative. So what they do is they pick underlying funds to manage a portfolio for them. I'm not quite sure who manages a specific portfolio for them because they have different brands. So it's almost like the Ned Group investment approach of selecting best of breed managers.
Okay. Well, they certainly are getting a lot of support. And then the outflows, the guys who are losing money. We spoke about Fairtree last month. There was a particular reason there. But once again, Alan Gray Equity rather, is bleeding.
Yes, they're bleeding, but they've actually had a really strong performance period. So it's not due to performance, or we don't think it's due to performance. I think it's more reflective of their size and the South African environment. You have when you are the biggest, a little bit of outflows and out of your fund, and it looks really, really big, but in the context of their size, it's generally a much smaller percentage. So if you got that factor plus maybe investors switching from SA domiciled funds to offshore funds, which we're starting to see a trend, it might stay within the house, but it's leaving the one fund to go to the other fund.
So you could be going from Allan Gray SA Equity to their Orbis partnership fund, for instance. Okay, we are going to go back and talk a little bit more about the fund, the Corion report, but I want to take you through my picks on the fantasy fund manager and get your expert opinion. As I say, there we go. Weekly rank. I mean, this is after one day. 708 out of 2885. I hope I don't fall into the bottom quarter. But there's First Rand, Tungela, Sun International, Textainer, Spar, and Naspers are the 6 that I've gone with. And here is what they've done so far. Tungela, well, Textainer, okay, or very well rather. Sun International, First Rand, Spar, and Naspers. Now, if you were managing this portfolio, how would you change it?
Sure, tough question. I would say personally, I was thinking between Sun International and City Lodge. I went for City Lodge. Think it's probably similar kind of sensitivity to macro factors. SA Inc. Obviously, Sun International has more of a gaming element, but I actually did think of that stock. But I actually went for City Lodge due to the fact that I think there's a bit of a more of an asymmetrical profile. It's been really under a lot more pressure. So that was my pick on a relative basis. First Rand, I went for Remgro in that sector. Both, I think, are at historic. First Rand is an attractive dividend yield relative to history, so not being too critical there. I went for Remgro because, in addition to owning some of the banking and assets, you've also got a deep discount to net asset value. So hopefully, there's a potential narrowing there. Spar, I went for Mr. Price. Spar's probably a little bit more defensive of nature. The retails have been under significant pressure, the more interest rate sensitive retailers. So that's why I went for Mr. Price. I went for a little bit more aggressive, hoping for more gearing, try and get to the top of the leaderboard. You went a little bit more defensive. And Naspers is an interesting one because, if you had to ask me which share would be the most selected in this game, being mostly retail investors, I would have said it would be Naspers, and it was. So probably the most well-known stock in South Africa, the most meaningful stock, and you and many, many others went for Naspers. From my side, Naspers has rebounded quite a lot over the last 12 months, off obviously quite a big fall previously. I just decided that on the back of a good 12 months, I went a little bit hunting for something a little bit more different, and I avoided Naspers.
Yeah, well, that's been my laggard so far. But if I take,
well, you're not doing too badly.
Who did you go for in that group instead of Naspers?
Yeah, I was scared you're going to follow up that. I went for MTN. That's down 4% since I've started playing. So we're on the same. Yeah, okay. But it was much easier to criticize you than to criticize myself, Alec.
Of course, always is, David. Just in the past month, any other developments in the industry? And thanks for talking me through your thoughts as well on the fantasy fund manager. We're having a lot of fun there. 2,500 people playing it. Let's get to 5,000. I mean, really, we should. You guys have put a lot of work and a lot of effort into making this game available. It's for 6 months, so anyone joining late, it doesn't matter. But was there anything else in the industry apart from our fantasy fund manager that any other developments?
Well, apart from our fantasy fund manager, I was actually going to allude to the fantasy fund manager. I think the fact that of a slightly different angle to fantasy fund manager, that by playing this game, you can also get, there's a lot of professionals, investment analysts, financial advisors in the industry that can get CPD points, continuous professional development points, which is important for their licensing. There's going to be a lot of educational content on there. So I think the fact that one can have a fun game and serve an educational basis, I think, I know it might come across quite conceited, but, it's not just a Corion initiative. We have many people behind this. I think this is an exciting initiative to further education in the industry. So I'm still going to go with Fantasy Fund Manager, I'm afraid.
Did it keep you up? Were you whining at the beginning and saying you haven't had enough sleep? And is that Fantasy Fund Manager what done it?
It wasn't. We pride ourselves on getting reports out at the beginning of the month as soon as we can, and you add the Fantasy Fund Manager and the questions. Let's say it wasn't a stressful period, but with public holidays as well, it was an exciting period, and that the whole Corion team and our partners, had to do a lot of work, and we got it over the line with very little hiccups. So, yeah, I didn't mean to whine. It was actually a really, really exciting few days.
No, I'm really just pulling your leg, David. We're very excited to be part of the whole Fantasy Fund Manager initiative, and long may it continue. And really, as Piet Viljoen said at the BizNews conference, he's going to participate. I don't know if he's already signed up. I haven't seen his name there. But it's a different type of thing, and anything where you can learn while you're playing has got to be a good thing. Certainly, he said that.
100%. Thank you.
David Bacher is with Corion and the author of the Corion Report and the initiator of Fantasy Fund Manager, and I'm Alec Hogg from BizNews.com.